Hi guys, welcome back to video number 2 for the weekly series based on stock markets and volume compression profile. Today I'm looking at a few more stocks to share with you, but I just wanted to go through what happened over the last course of the week and seeing what the stocks that we recommended over the last week did. So the first one was GS. First one was Goldman Sachs. Like we said before, you had a couple of moves. Sorry if I make this a bit clearer. You've obviously had a VCP patterns appearing. So contraction, then another expansion, another mini contraction there, and then a breakout and an expansion. So when we looked at it, I think it was just breaking out. It's held its breakout point. And on the weekly, you can sort of see this was like a nice little wedge pattern to the upside where it's, forming that kind of pattern there. So that worked out well. So, if you're holding that, then kudos to you. Obviously, the second stock that we were looking at is Reddit. Now, Reddit did make an initial move higher, but then was immediately, had a really poor finish to the week. So we were looking at, sort of a 10% move to the upside on the week, but which ended up being only a 2% move. So yeah, it's looking like, if you want to continue holding it, you probably could. But the thesis didn't change. So we were still looking at this huge level being broken. So you had a huge emphasis on people buying, and then you had the break above, and then you had mini contractions all the way up until the break point of this level, which is coincides with sort of the weekly profile where you've got little small bars before a big push to the upside. So that's what you're looking for basically on a weekly profile outlook. So still targeting this high. I still think we can get there, but it's obviously stalled for a bit now. So let's move on to the last one, RKLB, which was probably the most successful one that we had last week. So if we're looking at it from this perspective, it had a huge move lower, came back above the 50 period moving average, which is this red line here, signifying that a buying move or bulls were now in control of that market. So you had a nice break to the upside here, and then as it's breaking above here, you had a nice little contraction pattern here, which coincides with sort of an inside bar candle on like a weekly chart. So Monday came, and then we just went higher. We never looked back. So we had a week where sort of 12%, as high as 18%. Week on week, which is pretty good going. There was another one here that I took part in just on a demo, but it held the 50 moving average really nicely, and then once buyers sort of stepped in back above sort of the 230 levels, you had a nice little sort of contraction there before market moved higher. And so this has been the most successful of the week, up about 60%. So SanDisk, everyone's talking about SanDisk these days. It's made a huge move since its lows, since its IPO really. So we had an IPO here where it initially went higher, then came back lower, and then by the time it finished this huge basing move here where buyers are stepping in, by the time it did that, it's gone from $40 effectively all the way up to about 400, which is 1,000% return, and that doesn't happen very often. But yeah, let's talk about some of the ones I've got this week. Now, this week, I've obviously got sort of laggards in the NASDAQ. It's hard to chase stocks that are moving up 10, 12, 15% week on week. You want to buy things when they're making these sort of moves before they break out to the upside, because that's when you gain the most. So you can see Tesla has not breached its all-time high yet. So its all-time high is acting as like a ceiling up here. So we have made now at least through three. We've been going long for about 3 weeks. and price has broken below the 50-period moving average. But I want to show you this, that when price breaks below the 50-period moving average, it's usually a good point to purchase some shares of Tesla, especially if the overall market is still bullish. These are usually periods where the market does really, really well. So apart from when you get an extended move where the break doesn't break above in a fashion where it's in line with the overall market, then you get extended periods of moves lower. So obviously this was the Trump tariff before we eventually got a break above the 2050 and the 9-period moving average. So this is an opportunity round here. So what would it have to do? It would have to break the previous weekly high and close above the previous weekly high. So if it does that, you're sort of looking at this $460 level. So you're looking for a break, a retest, and a continuation. And at this point here, your risk is only so from 450 to 420, so it's $30 per share, which is a good idea considering the entire market is long. So it's not too much of a risk. Empower, monolithic power systems, again something similar, but this is something that's fairly straightforward. We've seen this now. So we have a period of consolidation sometimes, then you get a massive break and the price moves higher. So now the market is now in a period of consolidation. We want to see a break above 980, above the $1,000 key level, and a retest of these highs. So if you go from sort of $1,000 to 160, that's $160 a share. Your risk should be about between $1,000 to $850, so $150 a share. So or alternatively about 100 when it's down to about the 900 levels. So yeah, so it's looking like a break above the 1020 level, then the market should go higher. Shopify as well, you've got a 2-bar reversal pullback here. Notice how if you extend this chart, it's looking something like this, which means on a higher time frame, it's looking something like this. So we've clearly climbed above the 50-period moving average. So we've climbed above here. So we recently broke lower. We've closed above here. We've held this level. Let's see if we can't find any buyers to push this market higher as the overall market is going higher. So, there's an opportunity here for at least a 10% gain to be made within the next 2 to 3 weeks, in hopes that it will continue on its move higher. Warner Brothers, massive moves in the last few weeks. Certainly one of the leaders, especially since 2021, it was all the way up at 80, and hasn't been up there since. So it went all the way from 80 to about 8, which is a 90% move lower, and is now climbing back up. So you're getting this so power earnings gaps. So in here you're getting earnings gaps. I think this is probably a merger or acquisition. And then it's had a base and it's moved higher. So it's now been climbing these moving averages ever since. And now you're getting a section where it's basing, but it's very low risk base, because if it breaks the $30 level, you can instantly put your stop below the 28. So that's $2 per share of risk. So you're essentially looking at this triangular pattern forming. So, nice little continuation, ascending wedges and ascending triangles. So hopefully you can see that as clearly as I can. WDC, or IDEX, IDEXX Laboratories climbed above its 50-period MA. So buyers have been buying this power earnings gap here. So earnings came in, they did better than expected. Prices moved higher. Absorption, right? Again, another earnings gap here. Prices moved higher, and then absorption coming back in. So now you're looking for the continuation of the highs. So this has been in a decreasing downtrend for a period of time. I suspect that if you can get a sort of opportunity to buy around about these areas, it's a very small risk down to the 660s, but it's a very high reward down to the 800, up until the 800. So you're looking at a potential of 12% return on a 6 or 7% drawdown level. It's really simple. So yeah, and then obviously the last one is Baker Hughes, massive base. So if I look at it from this perspective, you have a really huge $51 level right there, and you know it's been moving sideways for since October. So if you get the big push that you're looking for, I mean, you know, you're looking at potential for 57s really quickly, and then you're looking at 72s really quickly after that. So that's where this is. But anyway, that's just obviously my perspective on things. Plan accordingly, and obviously make sure that your risk is managed. But yeah, see you next week, guys. Thank you.